That really does seem to be the case. We're seeing foreign investors flock back to the market in a way that we haven't seen since the Abenomics rally back in 2013. So, foreign buying so far this year, that is a record since that time. And that's all really come about with, I think, to a large degree, with the media attention that's gone on Japan since Warren Buffett's visit. I mean, I manage a Japan strategy. We've been running the strategy for 25 years. I've been the portfolio manager for 2 years. I don't think I would have been getting invited on your show even a year ago.
So if that's the case, Jamie, we've seen all this activity, then why is the yen still weakening? I mean, 3-4 months ago, we were looking at the yen at 129 and thinking, oh dear, and the Bank of Japan was beginning to get itchy feet and there was activity going on, and all of a sudden we're at 138. How do you explain that?
Partly it's a function of interest rates in the US, as rates have been rising, particularly the long end in the US recently, while Japan is holding them constant. You have a yield curve control policy from the Bank of Japan, and that means the rate differentials are widening, which makes the yen relatively less attractive.
Right.
I think it's basically that simple.
Really, but do you think a policy pivot would change the course, even if the dollar continues to rise? A policy pivot by the BOJ?
Well, it's an interesting question. I mean, the one thing that could force the BOJ's hand is if the yen really, collapses, which can stoke domestic inflation, and they may have to try to get that under control if they fear it getting out of control. And the way to do that would be to relax the yield curve control policy and/or raise rates at the short end. At the moment, that doesn't look like it's going to be the case. We have seen inflation accelerate. But that's primarily been driven by price increases in packaged food, which has been driven by increased costs, particularly in commodities and from the weakening yen. And most commodities in Japan are largely imported. But we're seeing import prices fall in yen terms in April. And we're seeing inflation level off when you exclude food and energy from the calculation. So I'm a bit less worried about that than I was, a couple of months ago.
That's sounding awfully like the old transitory kind of argument, isn't it, Jamie? And the transitory argument didn't work out particularly well for the EU. It didn't work out particularly well for Britain. It didn't work out for America. It didn't work out for Australia. Is this time different?
Well, I think Japan is different in a way because you don't have the same underlying inflation pushes on the wage side. So we saw some wage agreements, record levels, but it was still 3%.
Yeah,
and that was
record levels of wage agreements.
That was only for a portion of the economy. So overall wage growth is still relatively subdued. And just the dynamics of the labor markets don't seem to be the same. And we're not really seeing the inflation come through on the services side as we have in the US and Australia and elsewhere.